Good morning, May 13th, 2026. Here's what's happening right now. U.S. inflation just printed its biggest jump in 3 years. Gold is plunging. Bitcoin is ripping back above 81,000. And Dow futures are dragging while the Nasdaq runs. That mix tells you one thing. The market is suddenly pricing fewer rate cuts and a stronger dollar. In this video, I'll show you what changed overnight, the levels every major asset is trading at right now, and the 3 setups I'm watching into the open. Here's the main story. The April CPI print came in hot, the biggest monthly jump in 3 years per Mint and CNBC. The immediate reaction was clean and brutal. Rate cut bets got slashed, the dollar caught a bid, and gold got sold. Look at gold. Prices pulling back to $47.09, down about 0.5%, and that's the surprise. With Iran war headlines still hot, you'd expect gold to rip, not fade. On the chart, this is a rising wedge going back 6 weeks, converging rails with shrinking momentum. Wedges typically break against their slope, so the bias here is lower. The operative level is 4,700. If gold loses it on volume, that's a moderately reliable breakdown signal targeting 4620. Hold above, and the wedge is still alive. Low reliability as a short until it confirms. Now crude. WTI is holding 101.80, down 0.33%, but still parked near triple digits. Reuters reports the IEA now sees global oil supply falling below demand this year because of the Iran war. On the chart, that's a bull flag, consolidating right under 103, the recent high. Bull flags resolve in the direction of the prior move, and by E&M's half-mast rule, a clean break above 103 projects toward 108. Highly reliable if it breaks on volume. Low reliability and a likely bull trap if it just probes and rolls. And Bitcoin, the wild card. CoinDesk flagged Bitcoin reclaiming 81,000 right after the CPI print. Cointelegraph notes the pattern looks like a setup that's produced fresh all-time highs within a year on 7 prior occasions. Chart-wise, BTC is testing the 82,000 resistance, the level that's rejected price 3 times this month. That makes this a textbook resistance test inside a descending channel. A decisive close above 82,000 on volume is a highly reliable breakout from the channel. My read? Hot CPI usually crushes crypto. The fact that Bitcoin is up instead tells you the debasement trade is alive, even while gold. Here's where the market is trading right now. S&P futures, 74.40, grinding higher, up about 0.2, sitting right on a rising trend line from late April with 4 touches, highly reliable support so far. Nasdaq futures, 29,364, the leader today, up 0.2%. Tech is the debasement winner of the CPI print. Dow futures, 49,730, breaking lower, down nearly 0.3, the only red index. That divergence is a tell. Old economy names taking the inflation hit. Russell, 2856, holding steady up 0.2 despite the rate scare. Gold, 4709, pulling back 0.5%. Bitcoin, 80,400, holding flat after reclaiming 81 earlier. Dollar index, 98.47, pushing higher on the hot inflation print. And crude oil, 101.80, fading slightly but still near recent highs. So overall, tech leading, Dow lagging, dollar firm, gold heavy. Key number before the open. Watch whether S&P futures hold 7,400. That's the trend line that's caught every 3 setups I'm watching today. First, Bitcoin. Look at this chart. What we have is a descending channel going back 3 weeks. Lower highs, lower lows, with BTC now pressing the upper rail right at 82,000. The CoinDesk piece called this the 82,000 battle law, and that framing is correct. If we get a decisive close above 82,000 on volume, that's a highly reliable channel breakout. The measured move targets 86,000. If we reject and roll back into the channel, it's a low reliability setup with downside risk to 78,000. The fact that Bitcoin rose into a hot CPI is the most bullish thing on the board this morning. Second, gold. GC is in a rising wedge that's been narrowing for 6 weeks. The operative level is 4,700. If we close below 4,700 on volume, the wedge resolves bearish. That's moderately reliable, with a measured move toward 4,620. If gold holds and reclaims 4,750, the wedge stays alive and the Iran trade is still in play. The reason this matters, gold should be ripping on the Iran war headlines. The fact that it's not, with a hot CPI on top, suggests real yields are doing the driving, not fear. Third, Nvidia as the proxy for the AI leadership trade. With Nasdaq futures up 0.2% into a hot inflation print, tech is once again being treated as the debasement asset of choice. Chart-wise, NVDA is sitting in an ascending triangle, flat resistance overhead, rising support from the April low with 4 clean touches. Ascending triangles carry a bullish bias and typically break in the direction of the rising support, highly reliable when they confirm on volume. The operative level is the flat resistance at the top of the pattern. A decisive close above it is the breakout signal. A break below the rising support, and especially if the broader Nasdaq loses 29,000, is your tell that the AI leadership trade is taking a real breather. So here's the takeaway. Hot CPI killed rate cut bets, gold is fading, Bitcoin and tech are leading, and the Dow is the lone laggard. That's a market choosing debasement winners over safe havens. Today's action will tell us if that rotation holds. See you all tomorrow at the same time. This is not financial advice, for education purposes only.